Now, the Commonwealth Bank boss has said the RBA may not cut interest rates until 2025 because of persistent inflation. Joining us live now, the independent analysis, the best in the business, I'd say, Evan Lucas. Good morning to you again, Evan. So what did you make of Matt Comyn's comments?
Yeah, it's interesting because he's actually going against his own economics team, right? So the Commonwealth Bank actually have an expectation from their economics team that rates cuts will start in June. But it was quite a speech he gave yesterday afternoon when he was interviewed about CBA's results to actually say that persistent inflation, the expectation around the stage 3 tax cuts, even with them being revamped, and this changing persona that may keep inflation at a level that the RBA can't cut, and therefore the first rate cuts might not happen, as you said, till next year. He also then very much pointed out that at the moment they are seeing a fairly interesting increase in the pressure that's been felt in their home loans, and that's certainly something that they're having to address. It didn't come in their numbers, I want to point that out. They didn't see any form of increases in what they refer to as bad and doubtful debts, but it was fascinating to hear him actually point out that they are starting to get worried that the whole population has possibly got slightly ahead of itself on where and when rates are going to move.
I'm not an expert like you are, Evan. I kind of feel like there will be a cut this year just by looking at the numbers
with you on that.
And how the trends are emerging. Do you think, though, when it comes to forecasts, though, whether it's cuts or rises, how haunted are the authorities by the ghosts of Philip Lowe's predictions?
Pretty high. And not only that, you need to also, look at the next person in line, and you look at someone like Michelle Bullock. She was even stronger in her views than he was. So I've said this before, and I think sometimes this gets lost. This chart too, I want to really get back to this. This was fascinating from yesterday, from what CBA showed about how unevenly, they even called it that, unevenly the rate movements are. And the one that I want to look at the far right-hand line, that's the savings rates. And you can see anybody over 55, they're actually increasing their savings rates, and it rapidly moves once you're above 65. It's because they don't have mortgages, they don't have debt, and they've got money to put into savings. You also then look at the middle one, look at the increase in discretionary spending from those over 65. They are showing so clearly that they are not being felt. In fact, they're actually benefiting from this whole scenario. So back to your question about Michelle Bullock and therefore that movement, they are fully aware that if they were to go too early or even suggest that they were going to go, the change in that chart, the change in discretionary spending, the change in spending habits will flick. And that's what she's worried about. And that's why there is that risk that she doesn't go this year. Again, I'm with you. I actually think that probably Melbourne Cup is a live example. Melbourne Cup Tuesday will be a live chance for a rate cut, but not until the back end of the year. Because again, we are positioning for stage 3 tax cuts, for this likely rate cut to come. And that can keep that persistent inflation up. So that's the caveat. That's what Matt Comyn's pointing. And to your question, that's also what the RBA will be worried about.
Amazing stat you showed us there, Evan. You compare the over 65s to the youngsters and how that's going to be.
And it's going backwards. I mean, anybody under 45.
And as they get older, it's still going to be the same problem.
Correct. Well, the interesting point on that, sometime in the next 20 years, will be the intergenerational transfer. So that 65 group, unfortunately, will pass away. And what happens when that money gets passed down the line? How does that get? And then we're going to ask that question that comes, what about death taxes?